So the market is like that girlfriend you're trying to break up with, but you just keep getting back together. And today we're kind of in the, I think we should break up phase. Why? Because Credit Suisse seems to be ruining it for everybody. Just yesterday, I felt like we were getting back together, right? Everything was going great. First Republic crashed, but then it came right back. But now it's probably going to be crashing again. You can blame Credit Suisse. So let's look at the headlines. And again, the market's like an old girlfriend that you're just trying to break up, but you can't seem to do it. Well, headlines. Credit Suisse shares tank as Saudi backer, get this, rules out further assistance. So no more money for you. Forget about it. Don't ask us. Stop coming back. We're not going to give you more money. Markets tumble as bank fears go global. As you guys can see this is international now. And Credit Suisse is in a fight to win back confidence as shares plunge. As of recording, I think shares are down like 25%. It's pretty crazy. And the other thing is, too, I was looking at stocks in Europe. They were halting to the downside. We're talking about bank stocks. It was pretty similar to what happened in the USA. And unfortunately, this sort of banking crisis continues. A couple more things I want to show you guys. You can see here, this is the chart for Credit Suisse. And it's actually pretty funny. I didn't realize it was this bad, to be really frank. So this is like back in 2007 right here. You can see that dot. And it's just been on a one-way ticket. And I mean, I guess you could buy the dip, but you've been buying the dip for what, like since 07 to 23, do my math here, is that like 16 years, something like that? It's like, it just keeps going down and down and down and down and down. And I don't know if it's coming back this time, because now the Saudis are saying, we're not giving you more money. And kind of the whole issue, and to sort of make it like a, the girlfriend metaphor, is because it really is feeling like that. The market goes up, you're like, oh, okay, everything's going to be okay. And it just like goes back down, and it's like horrible news. And you should break up, but then like it just keeps sucking you back in. And someone was writing in the comments, which I totally agree with that. This is an unhealthy market because every time there's some sort of reason why we should rally, it feels like, the meme investors come on in and just start buying Dogecoin or whatever stupid stock, and things, rally for like 1,000,000%, only to crash back down even further. And my particular, message on this, I've been telling you guys the same thing over and over again, is just manage risk. It's just, it's so hard to tell everyone, hey guys, you should throw everyone in the market and everything's going to go great from here. And this is just the reality is, unfortunately, a lot of stocks are overvalued. Liquidity is drying up, right? The Fed has been raising rates. And I think Wall Street is just trying to like figure out, okay, do we want to break up? Do we want to stay together? We know we should break up. We know it's not good for us, but man, the money's just so good, right? You get kind of enticed by these things. But, in this kind of world that we live in, regarding the banks, this is what it's all about. It's all about confidence. It's all about sentiment, right? So in a bank at any given time, like for example, I give them money, they might actually have my money. That is a real thing because banks make money by lending out money. Banks make money by investing in things, right? So what if they make a bunch of bad loans and they don't have any money, right? What if their investments all go down, right? They don't have any money. Like, what if they overcommit and over leverage, right? They loan out way too much. And then suddenly, if big money, we'll see, as we saw with SVB, people start going to the bank and say, hey, give me my money. And the bank gives them the money. And the next person comes, give my money. Eventually, though, unfortunately, they may not have enough. Any given time, for example, the bank may have, let's say, 10, 15% of like total deposits, like actual in cash. So if like, say 20% of the people come and ask for the money, they may not actually have it. And this is why it becomes important when something like, the Saudis say, hey, we're not going to give you any more money. And then like people are like, oh, crap, if the Saudis aren't backing them anymore, and we know that like, the money's not actually in the bank, I better get my money out now. And this sort of what's been going on. I think it was like I was reading last year, the last 3 months, $100 billion was being pulled out of Credit Suisse. This is like a real problem. And the unfortunate thing is like, okay, so where do we go from here? I'm telling you guys, unfortunately, I think a lot of people are going with Bank of Mattress, be it for good or for bad. And the other thing too that seems to be happening. So if you're not into Bank of Mattress, at least in the USA, at least what was being reported is that people are pulling out money from the smaller banks and throwing them into the larger banks. So it's not like everyone's doing Bank of Mattress. They're just going to safer things. It is a crazy situation because the Credit Suisse thing is pretty scary because like if that is the same situation in Europe, say, as in USA, we may see a consolidation of banks where you see a lot of smaller ones fail. Now, I don't know if exactly that is going to happen. You could certainly make the case I know a lot of people in the community, always are talking about Bitcoin and stuff like that. I'm not into it myself, but I do see numbers. I do see that Bitcoin keeps going up, and I can't advise anyone to like put money in that stuff, because to me it's all like basically monopoly money anyway. This time about Bitcoin, but you can make the case that fiat money is monopoly money, guys. I really get that, because it seems like we're in this endless printing stage. So this is the sort of what the market is. I just wanted to give you a general gist of like looking at the market like, whoa, what is going on? I thought we recovered. It's Credit Suisse, and again, it's like that girlfriend. You should break up, but she keeps drawing you back in. But this time, I think the Saudis are really serious, and they're going to break up with Credit Suisse. At least they said, we're not giving you more money. Stop calling us, stop asking for more. And this is the deal. And that's why I wanted to show you the chart in Credit Suisse. It looks bad. It's been going down for a long time. And, the thing is with these kind of things with banks is because they're all interconnected, if something like a Credit Suisse were to fail, and I think it's like the second largest bank over there in Switzerland, would that have ripple effects throughout Europe? And then would that have ripple effects throughout here? I'll give you an example. It's really interesting. I was talking to my wife, and this is a true story. Even in the Korean news, the Korean government pension, I guess they got money tied up in Silicon Valley Bank. It's like, what? And I thought the Koreans were insulated, and so we haven't had any problems yet over here that I'm aware of, like huge problems. I think that one was like $24 million. I don't want to like downplay like millions of dollars, but it's not in the $1 billion kind of thing. However, you just don't know what money is tied up where, and sort of like when one bank fails, how does that, ripple on to the next one? So we're going to see. But anyway, that's what's going on in the market, and it's just a shaking of confidence. Some people may say, buy the fear. Yep, I get that. That worked out fine for people before, but again, always just manage your risk no matter what you do. So anyway, I'd love to hear your thoughts on this one. Do you think Credit Suisse is coming back? And moreover, do you think that now is the time that we should break up with the girlfriend? So thanks again for watching, and I'll catch you in the next video.